A huge crash in crypto today. You can see it yourself. Ethereum is down 9.5%, BTC down 6%. We're going to talk about the reason behind this drop and what we're seeing across the global market, but also a lot of other news. I'm going to talk to you about the central bank of a European country that's buying BTC. We're also going to talk about Ripple with the XRP ETF, which has been a big success. We'll talk about mining too, Bitcoin mining in particular, and companies that are actually moving away from mining to focus on AI. So yeah, a lot to cover today. Let's start with crypto prices. BTC at $96,000. We dropped below the $100,000 mark. Ethereum $3,000 and $159. Most other cryptocurrencies are down as well. XRP 9%, Solana down 9%, Avalanche down 10%. Basically, nearly everything is in the red today, with some tokens down more than 14%. So what happened? Well, you have to look at it this way. This isn't just about crypto. You need to see it in a broader context. The US stock market isn't doing well either. The Nasdaq was down 2% yesterday. The S&P 500 also down. CNBC explained this, and they say that yesterday was the worst day for the stock market in more than a month. We haven't seen a drop that big in the last 30 days. So there's been a broad market decline for several reasons. The stock market is getting nervous about what's happening with AI-related stocks. These companies have reached extremely high valuation, and there are growing doubts about whether those valuations make sense. SoftBank, for example, sold its shares in NVIDIA. A lot of people are starting to worry about this potential bubble forming around AI, especially NVIDIA and other big tech companies that now represent a massive portion of the United States market. So yeah, there's a general concern there. There's also the interest rates. The Federal Reserve has only 52% chance of cutting the rates in December, and a few weeks ago it was above 70%, even 75%. So people were very optimistic, and now everyone's thinking, well, it's basically a coin flip of whether the Federal Reserve will actually cut rates on December 10th. This also worries the market because the rate cut was seen as almost guaranteed before, something that would boost equities and crypto, since lower rates usually boost risk assets like stocks and crypto. But now the situation has changed. So yeah, if you remember also how things were in crypto a year ago, a little more than a year ago, we had this pretty strong correlation between the stock market and crypto. And we're seeing that correlation again. When the stock market drops, crypto drops even harder. And that's exactly what we're seeing today, in my opinion. There's no specific crypto-related reason that explains this drop. There's no new crypto ban in some country. There's no announcement of Donald Trump about banning Bitcoin mining or China banning other cryptos. So yeah, there's been no major news that would justify such a sharp crash. So this is panic, it's market adjustment, and honestly, after months of steady growth, having a small correction is normal. But to me, it's mostly just volatility. We'll eventually go back to higher level. Nothing has actually changed for crypto again. The fundamentals are still there. If you're here for the long term, there's no reason to change your strategy because there's a 10% drop. It makes no sense at all. Crypto investors in ETFs are also putting out. We saw $869 million in outflow yesterday from the spot BTC ETFs. It was the second biggest day ever in terms of money leaving these ETFs. So clearly something happened. It wasn't an ordinary day. Now, let's talk about the good news. We talk about the drop, but there are also things that are actually positive for crypto. Look at this. The central bank of the Czech Republic just bought BTC. Yes, really, it's not a huge amount. They bought $1 million worth and they created a test crypto wallet. They bought BTC, but they also bought stablecoins. They bought tokenized deposits from bank. So 3 different things they wanted to test just to see how it works, how to get familiar with this type of assets so they can potentially buy much more later. So yeah, it's only 1 million. It's only a test, but it's still positive for crypto. Central banks are starting to get interested in crypto. Some other countries also bought BTC. We saw Luxembourg Sovereign Wealth Fund bought BTC too. So it's taking longer than expected to have countries buy BTC and crypto, but it's finally starting. Next, we had the launch of the XRP ETF yesterday, and it's a huge success, plain and simple. It's the best ETF launch of 2025 so far, even ahead of the Solana spot ETF that's launched recently. A lot of analysts were surprised, but once again, it showed the strength of the XRP community and XRP investors. We'll see over time whether it attracts hundreds of millions or even billions of dollars. We'll keep watching, but this clearly shows that the altcoin ETF wave is starting. So yeah, next. Aave Labs. Aave Labs is the company behind Aave. They just announced they've obtained the MiCAR authorization. It's authorization in Europe to provide crypto asset services. So they comply with the Euro crypto regulation, which lets them offer users zero fee access to the Go stablecoin from Aave. We still don't know exactly how it will work on Aave, but I imagine it will be through the Aave interface. You probably have to do KYC or something like that, and then you'll be able to buy Go directly and deposit it on Aave to earn yield. It's really interesting to see a DeFi protocol obtain this type of authorization, potentially allowing them to bypass exchanges altogether and onboard users straight into DeFi without going through Coinbase, Binance, or other exchanges. Very interesting move. We might even see next, I don't know, Uniswap do something similar later. And yeah, so to cut intermediaries. It will basically be a service that handles everything end to end from the moment the customers arrive to the moment they leave, the moment they deposit to the moment they withdraw. Good news for Aave, again. Next, let's talk about Bitcoin company. Let's talk about Bitfarm, a very large Bitcoin company, Bitcoin mining company. They just said we're stopping Bitcoin mining to switch to AI, and it's not the first company that does this. There was already another major mining company that did this previously. Now we're seeing a second big company pivot from mining to AI. Simply because that's where the money is right now. Bitcoin mining is extremely competitive, costs are high, and the price of Bitcoin fluctuates a lot, so the rewards are pretty unpredictable. With the AI, the demand is more steady, more predictable as a business, and they think they'll be able to generate more profits with AI. Because with BTC, yeah, like I said, it's quite complicated. The public company Marathon, US company, Bitcoin mining company also, tried to buy, or rather is buying Exion, a filial of a French company that specializes in AI. So we're clearly seeing a trend today where the mining world is kind of merging with the AI in the data centers. What worries me personally for Bitcoin is that little by little, there's the halving, like I said, every 4 years, and miners get fewer and fewer rewards. And at some point, there simply won't be enough rewards left to properly secure the network. Sure, BTC can keep going up in price, but eventually the drop in rewards becomes so significant that it's negligible. So the network needs another source of revenue. Satoshi Nakamoto's idea was that transaction fees would eventually take over, but for now, transaction fees are nowhere near replacing mining rewards. We don't really see such actual demand for BTC as a transaction network. People don't really regularly use it to transact. What we see is people wanting to hold BTC long term. They want the assets, not the network, and that imbalance can eventually create problems. Imagine the worst case scenario. There are barely any miners left. This was actually mentioned years ago by a major BTC developers. Imagine all BTC ends up bridged outside the Bitcoin network, like only WBTC on Ethereum or other forms of BTC on Solana. The asset itself exists, but the network barely exists anymore. That's something that could happen once we get close to the full 21 million supply. Honestly, I think another solution will eventually be found, but people won't like it. It will create a war inside the Bitcoin community between those who never want to change Bitcoin and those who think change is necessary. Something will happen. I don't know, maybe the limits of 21 million will disappear. We'll see. Major change will come one day, not now, but in 10, 20 years, the Bitcoin network will have to evolve to survive. Speaking of Bitcoin, let's talk about Jack Dorsey, the co-founder of X, who now runs a company called Block. Their payment app works extremely well for peer-to-peer payment and merchants in the US. Jack is a Bitcoin maximalist. Years ago, he enabled Bitcoin purchases inside Cash App, and it works really well. But he always refused to allow the purchase of other crypto, even though he could have made a ton of money doing it. Now he's slowly opening up to other cryptos by enabling stablecoin payments in the Cash App. And stablecoin payments aren't happening on Bitcoin. They're happening on Solana for now. So he's opening the door to another crypto. They said they'll support other networks later on. For now, it's only USDC on Solana, but we'll see in the future. It's interesting to see that even Bitcoin maxis end up making rational decisions. Stablecoins are in huge demand right now, and if you run a payment app, you need to let users use them. Speaking of Solana, we just hit a 12-month low in terms of active addresses. That means fewer people are using Solana daily. Now, active addresses isn't a perfect indicator. One person can have multiple addresses, bots can have hundreds of thousands, but still it shows a trend. The trend is clearly down. Why? Because the meme coin frenzy faded. That's what pushed Solana to explode, the whole meme coin trading wave. Now that it's cooled off, usage has dropped. So we'll see whether Solana manages to come back. Will they find real use cases beyond meme coins, something more durable long term? They're clearly trying, especially with stablecoins. I think that's their only real path. DeFi, stablecoins, actual financial product that people use instead of activities where users lose money every time, like meme trading. And finally, let's talk about DYDX, the OG decentralized perpetual exchanges, the one that came before Hyperliquid. They had an insane airdrop back in the day also, not like Hyperliquid, but really big also. But since then, they've been completely overtaken by Hyperliquid and other perpetual dexes. And now DYDX is basically copying Hyperliquid. They just approved a token buyback worth 75% of protocol revenue. So 3/4 of what they earn will be used to buy DYDX token. Hyperliquid buy 99% of its revenue. But DYDX is struggling. They got overtaken. I still don't understand how they could make such mistake by changing blockchains. Historically, they were on Ethereum, then they moved to their own blockchains, and it didn't go well for them. Anyway, lots of things happened in the news today. That's everything I wanted to share about the latest crypto news. I hope you enjoyed the content. Don't forget to like, comment, and subscribe, and I'll see you tomorrow for more. Bye-bye.